This morning we had ISM Services PMI come out. Now, this of course measures the level of diffusion index based on surveyed purchasing managers, excluding the manufacturing industry. And it is a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. So we got this morning, and it came out less than expected. And U.S. services, again, the ISM Services PMI fell to 51.2 in March from 55.1 in February, and well below forecasts of 54.5. The reading pointed to the slowest growth in the services sector in 3 months as demand and employment cooled. On the other hand, capacity and logistics improved and price pressures eased to the lowest since September 2020. Also, the majority of companies see a positive outlook on business conditions. Let's have a look at the charts and see how the markets are reacting to this. So in reaction to this, the S&P 500 is actually down a little bit here this morning. But then on top of that, we also have the gold market, which I have to keep talking about. You guys know if you've been watching the channel, I've been talking about gold a lot recently, and for good reason. We actually broke in yesterday's price action the 2000 mark, which we've called for the 2000 mark for a while. So it's kind of cool to see one of those forecasts come out exactly as expected, but even more so, honestly, this move was pretty shocking to me. Not only did we break through 2000, we flew all the way up to 2030 in the most recent price action. Now, the interesting thing here is that gold right now is actually performing better than the stock market. Despite the stock market having a bit of a rally off of the dollar weakness recently, again, here's a look at the dollar, which has been very, very weak, reaching, by the way, our targets here of 101.5. Came all the way down here. So far, seeing a little bit of reaction off of this area. Despite that, though, I am not dollar bullish. I am still very much watching this level closely to see if we can actually break through the lows. If this breaks, guys, I think we have more room to fall, and we have to pay attention looking forward this week to NFP, which comes out Friday morning here in the US, which is likely to cause some serious volatility on the US dollar and really just global markets in general. So back to my thought process on gold, what I think is very interesting is that this dollar weakness right now is actually giving more strength to gold than it is to the S&P 500. Why does that matter? Well, again, it shows sort of confidence being very much in the shiny metal over stocks. So it's not just that, hey, the Federal Reserve might cut rates or slow its interest rates at the very least. It's that people are sort of like, they're seeing the dollar is weak, but they're seeing the gold market as a very attractive buy, which is an interesting thing. As we often know, many of you guys who are familiar with markets, you know that gold sometimes will rally when markets are fearful. So it's kind of weird that we're seeing the stock market kind of fall, but gold rise. That is a scenario which could hint at a little hesitation, a little fear. And I want to add more to that in just a second. Not only is the gold market rallying, but so is the yen. And we'll talk about the yen in just a moment. So the gold market broke again through that 2000 mark, floated all the way up to 2030. I continue to be long. If you guys are inside of the Discord group, you know that I took this trade the other day. I am still in my long trade. This is what the Discord channel looks like. So I shared this trade on the 3rd of April. I got into gold on a pullback, minor pullback, by the way, and it shot right clean up to the 2000 mark. And we continue, like I said, to be bullish and trailing stops on the gold market looking forward. This morning, during the news, we actually had a little spike back to the downside. But still, gold having enough resilience here to immediately spike back to the upside. In my personal view, gold is bullish as long as we stay above the 2000 mark. If we break through the 2000 mark, that is going to be the point at which case I trail out of my trade. And by the way, for those of you who are in the Discord, I plan on trailing that stop loss today. I'd like to lock in a little bit of the trade here so far. Now, again, gold, if it does retest this area, in my view, is actually a buy still. As long as it doesn't break 2000, let's call it 1990 would be a point for me to go ahead and take my stop and move out of this trade. But if price does decide to give a retest to that 2000 mark, this is a huge level of support that I will be watching going into the remainder of this week, and may add to my trade if we do get a pullback into that area. So that's something that I'm paying attention to. Now you may notice I have this red zone up top. This red zone denotes the all-time high of gold that we printed last year during the invasion of Ukraine by Russia. Now, this marks actually the $2,070 mark, or just shy of it, where we previously saw gold form an all-time high. This momentum that we see going on right now, and again, this is a weekly chart, we take a look at the daily chart, this momentum looks increasingly likely that it wants to head back to retest 2070. It's not that far away, and when gold is in momentum like this, it very often stays in momentum. We'll talk more about the gold market in just a second. I want to show you guys, though, the Japanese yen. The Japanese yen popped here recently, and this is especially interesting for my fundamentalists, my fundamental analysis traders. The yen popping and the gold market rising while the stock market falls is a recipe for actually a little bit of fear in the financial markets, right? So if we see the Japanese yen going up, which we know is historically that safe haven currency, we see the dollar selling off, and we saw the gold market rallying today. It's a very interesting dynamic. So you have things like dollar yen getting crushed here recently. Here's your daily chart. This thing is almost back down to the previous lows. You take a look at euro Japanese yen, which I actually, of all the yen crosses, I thought was the most bullish, still getting smacked here so far. And notably, the risk on currency pairs, Aussie yen and NZD JPY, these ones are taking a beating as well. So the stock market really has turned on its heels so far, and with it, some of the other risk on currency pairs as well. So let's go back to that gold theory for a second. Gold looks really the strongest thing on the list right now. But why is that? Let's go take a closer look, and I'll show you guys why. If we start out, and we've done this for the last couple days, so I apologize if you've heard me talk about this before. Let's take a look at the smart money tracker. So looking at smart money, what we can see is that the Japanese yen and the Canadian dollar are the most heavily shorted assets in terms of COT data. But flip it around on its head, and we've got euro and gold as the number 1 and number 2 most heavily bought assets by institutional data. Now, specifically when talking about the gold market, we've gone through this a couple of times. The long contracts at 245,000 strongly outnumber the short contracts opened on gold at 63,000. So there's a huge preference from big money to be long gold and short gold, and small preference for shorting. Now, not only that, the recent change has actually showed a major decline in the number of short trades open and a huge increase in long trades open. Something to pay attention to, I think, going into this week. Not only that, a red flag on the gold side is that if you look at gold, it has an 81% retail traders are shorting this market. They are betting against the flow of traffic here. And unfortunately, it's nothing new. Retail traders typically, when a market like this is running hot, they're going against it and they're getting beat up along the way. So like I said, I continue to be gold bullish. It is my number 1 favorite trade right now, and I will continue to be long until the data that we are watching turns around. By the way, speaking of data, if you guys do not already have access to the Edge Finder, I'll sound like a broken record for the regulars, but we're doing our 1-year anniversary sale, meaning we have worked on this software for the last full 365 days, and to celebrate all the progress that we've had, we are offering the tool at a massive discount. Now we're doing 40% off. If you use code YTVIP down below in the description, you'll get 40% off. But more than that, I want to show you guys what I've been doing recently here, which is if you are interested in getting the tool, I don't want you to just buy it. I want you to buy it, but I want you to get training on it so that you're fully aware of the product and you have all of your questions answered. To do that, you'll get an extra discount if you message us on our website. So click the link at the top of the description. It's going to open up this page. How can we help you? Click here and tell me about your discounts. And one of our support reps is going to be on the line. We have a couple people who are here trained to help people get set up with the Edge Finder. You can get access right now for an even bigger discount if you message us on our website and ask for discounts and training. We are standing by to help more people get access to our tool this month for our anniversary sale. Let's continue on now with the markets and see what else looks interesting. So I actually was looking at Euro Japanese yen for a possible long trade. I mentioned, remember, we looked at the COT data and we saw that the yen is still very heavily short by institutional traders, and that hasn't gone unnoticed. So I actually think that the Euro Japanese yen, I was looking at it for a possible long, but it looks like it might have already failed out. And again, I was looking at this zone here and it never even stopped. So I wasn't able to get into a long trade, and I'm actually glad that I didn't, because again, the market tanked right under support right away. So I'm kind of not interested in the euro yen trade at this time. But if we do see some rejection here today, if we hold this zone or we wick back to the upside, I really like euro Japanese yen for a long trade. Why is that? Well, let's break it down a little bit closer by pulling up the euro Japanese page on the Edge Finder. We can get a full picture of this. So COT data showing us the long preference from the institutional money. 74% of contracts on the long side, 86% on the yen are on the short side. The retail crowd is very short, which is of course a bullish indicator. As we know, historically speaking, retail traders tend to lose money when they trade. On top of that, you've got April, historically, seasonally wise, is a positive month for the euro against the Japanese yen. So I like it long for that particular reason. If we continue on, what we can take a look at is in terms of economic numbers, GDP in Europe and Japan is both at 0% as of the latest reporting. So there's not really a preference there. Inflation does favor Japan, as it is not nearly as high as the 6.9% that we have in Europe. And again, inflation, of course, important because printing lots of currency typically devalues the currency. So if we have a very high inflation rate, that is sort of a red flag in terms of valuation kind of thing. Unemployment, if we take a look at unemployment, you've got 2.6% in Japan and 6.6% in Europe. So unemployment, of course, negative for an economy. So if we have a higher unemployment in Europe, that's a little bit of a red flag, but interest rates more attractive in Europe at 3.5%. So in purely a trading perspective, I do like this thing on the long side, but really would rely on this thing actually wicking back to the upside to show some strength at these levels before trying to get long personally. So that's a trade idea that I have on euro Japanese yen that I'm watching, but we'll continue to monitor price action to see how that goes. Let's continue on. So again, I showed you guys my gold long. It's still up here on the top of the list. What about Swiss yen? Swiss yen at a +7 score. We'll take a look at that here real quick, and we'll get an idea of whether or not this trade is ready for us. It does look still attractive, but we're not quite at the pullback zone that I've been waiting for. If we can get a deeper retracement to this 61.8% retracement, which is a broken level of resistance, possible support, I really like that to the long side. And we'll look for an opportunity to buy the Swiss over the Japanese yen if that comes into play. Hopefully your trading is going well, and if it's not, then do yourself a favor. Don't continue trading on a live account until you are very confident in the trading strategy that you're using. If you're trading and you just have no plan and you're sort of just throwing darts to try and catch good trades, stop it.
Get some help.
Control yourself. Learn how to do this stuff. Back test your strategies. Use a demo account. Get familiar before you risk your hard-earned money. That is my tip. I wish more people would take that into consideration when it comes to trading. Stop risking your real money if you don't have a trading plan, trading strategy. And if you don't have those things, then one thing you may want to consider is joining our educational service, which is linked down below. You might say, well, Nick, it's not free. Well, neither is losing money in the markets with no trading strategy or any help. If you want some help, if you want some education, if you want to trade alongside myself and my team, you can see all the trades that are being taken within our Discord channel, which is actually included in our 1-year celebration sale for the Edge Finder. All that information can be found down below in the description. And remember, you can chat with us for bigger discounts on those things that we offer. Thanks very much for watching today. We'll see you next time. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.